Good morning, everybody. Good morning and happy Friday. How are you guys doing today? Little mic check here. We good? Good morning, Erla. Good morning, Jen. Zorro, nice to see you. Hope everybody's doing well today. I am too. Got a whole lot of sleep on a full belly, so always a good thing. Guys, welcome to the room. Glad to have you. Any new folks in here today? I know we have some people showing up. I hope that we get some fresh faces in here. We're going to talk a lot today about advantages again, guys. We're going to talk about patterns that repeat themselves. And we're just going to continue the process of consistency because that's really what we're doing. We're learning a few patterns and then we're developing trust in them. And that's one of the biggest things, I think, is trusting that when you enter a trade, you're taking a trade that you've proven through your own study, through your own participation, through replay, that it wins more than it loses, guys. And that's that advantage that the methodology gives you. And when we talk about advantages, the first one that I give myself every day is I want to know when news is going to print. I want to know when that announcement's going to be made, whether it's high impact or medium impact, so I can kind of sidestep the market and get out of the emotional response. Guys, if you were watching today at 8:30, the NASDAQ went kind of kooky. It actually went so fast that I couldn't move my stops and targets. I thought that it smoothed out, but it hadn't. It was kind of funny. Still made money, but I could have made a lot more if I could have moved my targets. So we're going to talk about one trade initially, guys. Once you check news, I put the link in there. Make sure you know where it is. Write yourself a note, set a timer with Siri or something. Anything medium impact, anything high impact, it can disrupt everything. It can mess up your patterns is the easiest way to say it. All the good stuff that you get every day in here, very little of it is just off the cuff. It is 100% straight from the education part of the Nexgen website, specifically the trading guide. All of the rules that I discuss, ideas for management, how to be consistent, how to study, all of those things are available to you guys. There's nothing that we do that we don't share with you. If I wake up and I go, oh my gosh, here's how they can do it better, then you guys get it that day. Of course, I don't just wake up with ideas like that. Everything that we do has been studied and tested and back tested and pictures taken and annotated, and man, we've gone through a lot of work to make it easy for you. The first thing that we're going to talk about is what we call a high probability trade, guys, and it's going to be specifically a high probability trend trade. This is my first hour every day. It feels like a lecture. I know that it does. And I say the same thing over and over and over. And I do that, guys, because I promise you, the more you hear something, the more you see something, the easier it becomes. It's just repetition. It's creating recognition through repetition. And I mean, life is like that, right? In high school or college, you would listen to the lecture, but you would also take notes, and then you would go back and review those notes. And then if you had questions, you would ask questions. And you would prepare yourself for the final test, guys. And this is what we're doing with the software, is we're learning the rules so that we get the answers, so that we know what it looks like. And this high probability trend trade that we talk about first, guys, this is a trade that typically wins 70 to 80% of the time. This is a trade that creates confidence through the memory of success. And this is a trade that's going to teach you to read your indicators, guys. This is a trade when every chart agrees for the rules for the trade. You're going to have the strongest triggers and nothing in the way, nothing between you and your targets. And this turns you into a chart reader. This makes it so that you can open up your software, look at those charts, and know what your indicators are telling you. Hey, good morning, Kenan. And chart reading is about 90% of your day. Sitting on your hands and doing nothing until there's something to do. Sitting on your hands and not hoping or wishing or wanting or praying, but rather waiting for your advantages to be present, guys. And you literally will spend probably 95% of your day in waiting. You're professional waiters. You're not day traders. And then that 10% where it's time to be active. It's being active because the rules are met. And the rules provide a statistical advantage. The rules are nothing more than a pattern that has been tested, that has been proven, that has been validated, that you can have 100% certainty in wins more than it loses, guys. And that advantage is why you enter the trade. And when you start getting good at reading your indicators, when you start recognizing these advantages, you're going to understand where the market is likely to continue. This is a fantastic point for entry. You're going to understand where the market is likely to go. It's going to help you with targets. And you're also going to understand where the market is likely to stop, which means one of the things that you're going to be able to do is look at your charts and say to yourself, man, there's stuff in the way. I shouldn't be taking this next trade. And that's going to be one of the big factors that's going to help you, because these likely to stop areas can also reverse the market. And when they do, it creates an awful lot of strength. So we're going to go through a pretty simple process, guys. We do it every day, talk about it every day. And it's going to be 3 rules. That's it, 3 rules. 3 rules, creating 3 advantages, getting you into a trade. Rule number 1 will give you the advantage of momentum. And momentum, when we talk about it in terms of trading, momentum means that the market is likely to continue in the direction of the trend. That's a great advantage to have. Momentum can break through key areas, and momentum can even cover mistakes. Did everybody lose audio? Can you guys hear me? Give me a Y if you can hear me, please. Okay, cool. So it's probably just Pete. Yeah, if you ever say, man, I can't hear you, and then a flood of Ys come in, it means that it's probably on your end, and Pete knows to go and reboot. The second advantage from rule number 2 is going to be the advantage of a clear path. That's that nothing between you and your profit targets, no areas that may reverse the market, guys. And once you understand the first 2 rules, once you can identify them, once you believe in them, once you respect them, guys, there's a million ways to make money in the market. There really are. But you've got to keep it simple first. You've got to keep it very focused first. So we're going to focus on only 2 rules, and we're going to allow these 2 rules to happen on only 2 charts. And that's about as basic as we could possibly make it for you. There's going to be a large chart and a slow chart. How's that for easy, right? You don't have to memorize any numbers or time frames, just big chart, little chart. The large chart is a slow chart, guys. It's like a broad stroke of a brush. It gives you the overall temperature of the market, if you will. And on the most current bar on your large chart, it's going to define the direction of the market. And this is the easiest lesson that you're ever going to get, unless you're colorblind. But red means that the market's going down. Means you should be looking for rules to be met for high probability trend trade short. Green means the market is going up, and that means you're only looking for rules to be met for high probability trend trades long. And guys, you're getting that on the very first bar, the most current bar. It's also going to let you know if rule number 1 is in play, and if you have that advantage of momentum, and it will also identify those areas that may stop the market, termination conditions. Guys, 2 out of 3 rules are happening on the large chart. 2 out of 3 rules are going to happen on this big, slow, hard to see change chart. And then once the rules are met, you're going to use a small chart. You're going to refine that broad stroke of a brush, guys. And this is where rule number 3 comes in. This is where entries happen. This is where management takes place. And it happens like that because on the large chart, it's this big, slow moving chart. But on the small chart, there's all these fluctuations. You're going to be able to use those fluctuations for entries. And we use the 2 charts because they really are a direct reflection of who's in control of the market. The large crowd is the large chart. And these are the guys that when they get together collectively, they've got all the money, they've got all the power. They're like, we want it to go up, we want it to go up fast, and we're not stopping until we hit that line. And guys, we just hang out with these guys. Whatever they're doing, we want to do, right? We let them start it. We let them get it moving. We'll hop in, we'll hop out, get paid, go to the beach. The small crowd has a lot of money, guys. The small crowd isn't small like us. The small crowd is small like, I don't know, Wrigley Field, full capacity. And they've got some power, and they can push, they can fight everything that the large crowd does. But these guys fail, typically 70 to 80% of the time. Your rule number 3, your rule for entry, is designed to pinpoint exactly where their failure is most likely to happen. And that becomes your rule for entry. And you use that refinement chart so that you can see that little pushback. Your advantages aren't going to go away on the large chart, but they're going to look like they're gone on the small chart. You're going to pinpoint the failure point. And that becomes your entry. So we're going to learn the rules. That's it. We're just going to focus on learning the rules. When I teach the rules, one thing I do is I use language and visual a lot. I'm going to give you the verbal, right? This is rule number 1, says strong triggers. And then we're going to talk about exactly what it means to have strong triggers. And we're going to talk about exactly what that advantage means to you as a trader. And we're going to do this for each individual rule. I'm going to break them down one by one. And you'll be able to study them one by one. And eventually you'll piece them together. Your chart read will tell you that your rules are met. And that's when it's okay to trade, when the rules are met. You guys can simulate, practice. Guys, don't wait till you think you're great at this to start trying to do it. Just get in there and start playing. Take trades. Get used to moving stops and targets. Practice your entries. Make mistakes. But the thing is, guys, you've got to post everything you do in the classroom. This is one of the things that makes this classroom so effective, is 15 hours every week. I am here, and my sole purpose is to help you become a chart reader. So if you take a trade, the one thing that's real important that you do for me is talk about those 3 advantages every time. Talk about momentum. Talk about whether or not there's things in your way, and show me where you get in and get out, guys. Either put circles on there or make sure that your trade markers are on there. Let me see exactly what you're doing. And this is going to allow me to give you the absolute best feedback that I know how to give you. We will talk about the 3 advantages. We'll talk about how to do it better if there's a way. Sometimes we'll just kind of high five because you did it so well. Guys, I don't beat you up for the trades that you take. I look for ways to help you do it better. That's my goal. And sometimes I just can't. Sometimes you're so stinking good that I'm like, wow, that's amazing. And I steal it. I pull it right out of the room and I put it into my spreadsheet, guys. And the spreadsheet is the second thing to get to where you want to be. First, you got to post a lot of pictures. You got to ask a lot of questions. You got to get knee deep and participate. And then use that spreadsheet that Nexgen provides, guys. Your first tab is trade tracking. This is where everything that you do, win, lose, or draw, you're going to drop it into this spreadsheet. This becomes your trade journal, and there's directions on how to paste links into the spreadsheet, and there's directions on how to annotate your charts to get the absolute best feedback and give you the easiest path to studying them. You're going to talk about how you felt, what the conditions were, and then guys, you're going to be able to put your feedback that you receive in class here in the notes section. And we're not just doing this and ignoring it, right? And we're not filling it up. It's not busy work. What you're going to do is tomorrow morning, well, tomorrow's Saturday, so maybe Monday morning, you're going to look at what you did yesterday, and you're going to say to yourself, you're going to ask, what worked? Of the 10 trades that I took on Thursday, what's one common thread that really seemed to lend to the success? And guys, momentum is going to be one of those words that you find yourself saying a lot. Clear path is another. And then what didn't work? Maybe you broke your rules. Maybe you jumped in early. Maybe you got out late. And you're going to notice that your rules create this easy feeling. Your rules give you, you're almost relaxed. Once you begin to trust the methodology, you don't worry a whole lot. You simply do or do not. It's very Yoda. You focus more on the execution rather than the result. And when you're breaking rules, it's going to feel a little forced, and you're going to feel nervous, and you're going to find yourself moving stops and being a little jumpy. So if you go back and study these every morning, what happens is you're setting yourself up for the day. You're focused on the things that are bringing you success. You're focused on avoiding the things that are not. And one of the things that I do, guys, is if you commit to that posting in the room, if you commit to giving me everything that you do and telling me everything that you see, I promise you, I'm going to recognize patterns in you the way you're beginning to recognize them in the market. And we will work hand in hand every day to help you overcome any challenges that you're having, to point out the things that are bringing you success, to high five, to celebrate victories, guys. But it's very much a relationship in this room. You have to do your part by posting. I'll do my part with the feedback, and together you're going to get exactly where you want to be. And we do that really by simplifying. The path of least resistance is giving yourself the least amount of things to think about. And I know that sounds weird, right? But Mark, day trading is hard. It's got to be complicated. It really doesn't. And you guys that are my age, working that 50 number, remember back in the 80s when we played video games, and it was patterns that created victories, right? Whether it was Pac-Man or Galaga or Space Invaders, there were things you could do to ensure your success. Your rules are the exact same concept, guys. They're just patterns. And when you adhere to the patterns, life gets easy. And when you deviate from the patterns, you find yourself struggling. So you've got to know what the patterns look like. What are the looks that you're going to commit to? Man, Morgan, I love Dig Dug. You've got to know what it looks like to have your rules met. You've got to know what it looks like when the perfect trade is in place. And guys, the more you study them, the slower the market moves, the easier it is to find them. So there's a couple more tabs on this spreadsheet. The second tab is 101, and I'm going to give you a little Word document to help you learn how to study, to break these rules down individually, to know exactly what it looks like when your rules are met, and also to know exactly what it looks like when your rules aren't met, because you want to know both sides of the coin. There's a section called Favorite Looks, and this is your favorite looks, guys. This isn't my favorite looks. Everybody likes different things. You are an Asteroids guy? Man, I loved all the games, I think. I was a junkie. When we got Atari 2600 sometime in the 70s, it was amazing. What's it going to look like to get you into the market, right? What does your perfect trade look like? Your perfect trade might not be a high probability trend trade. Your perfect trade might be a trade where you simply jump in and get out with quick profits. Your trade might be an HVA trade or a momentum trade. Who knows, right? But you're going to build this database of exactly what it looks like to get you into the market, guys. We're only focused on entries initially, and then you'll work your way to management, and then you'll start to get these patterns that repeat themselves, looking at termination conditions. And your goal is to make your favorite looks look like the page that I put together here, guys. This is the client trades. This is almost 400 pictures of you guys doing amazing things in the market, using that momentum, embracing those clear paths. You've got the entry sequence for both long and shorts for the high probability trend trade in the upper left-hand corner. You've also got management ideas, not only a very basic mechanical management plan, but also ideas for when you can hold a little bit longer, patterns that repeat themselves, a whole section on termination conditions, areas that may stop the market. And then guys, a lot of you are going to be tempted because you see me or John Novak doing it to trade the NASDAQ before you're ready. NASDAQ is kind of that next step, guys. NASDAQ moves about 5 times faster than crude oil, about 5 times faster than the S&P. And you've really got to be comfortable with your rules before you make that transition. But when you do, I've got a whole section for you here, and I love to talk about the NASDAQ. It's almost all I ever trade. But I've got 4 years reading indicators, and I do make decisions really, really fast. And you'll get to that point. So all of this is available to you. Take a lot of pictures. If you're taking 15 pictures a day, guys, you're going to put yourself around 300 pictures a month. And I'm going to tell you right now, once you build the habit of taking pictures, it's going to be surprising if you take less than 20 or 30 pictures a day, because you're going to take pictures of entries, you're going to take pictures of exits, you're going to take pictures of management mid-trade, you're going to take pictures when your rules are met and when they're not met, and you're also going to take pictures of patterns that you're beginning to recognize. So I want you to really fire up that camera and don't be shy with it. And any picture that you need feedback on, drop it in the room. We'll talk about it. So we're going to move forward, and we're going to talk about these 3 rules. 3 rules, 3 advantages, keeping it simple. Your brain is going to tell you you need more. Tell your brain to shut the hell up. We're going to keep it simple. Momentum, clear path, and entry. That's the rules for the trade. Once you have momentum and a clear path, doors begin to open, guys. More trades begin to present themselves. We're only going to look at 2 charts, and even more specifically, we're going to let the first bar on the large chart define direction, momentum, and areas. We're only going to turn our attention to the small chart when it's time to enter the market, because that's when the small crowd is going to fight every advantage that you have. We're going to pinpoint their failure. So let's do this. Rule number 1, large chart, big chart, slow chart leads the way. It must have strong trigger lines. I apologize, guys. My allergies are going a little nuts. If I sound snotty, I don't mean to. I know that's kind of gross. Large chart must have strong triggers. Strong triggers create the advantage of momentum, guys. So I'm started doing this every morning because I think that I get new people, and they're like, "What the hell's a trigger, Mark? Why are you even talking about triggers without telling me what they are?" Well, trigger lines are nothing more than moving averages, guys. The Nexgen uses a lot of colors so that you know what's going on, right? If the background's red, the market's going down. Well, the same is true. If your large triggers, these dashed lines are red, they're going down as well. Same with the small triggers, these solid lines. These are both moving averages, and they're going to work together to help define momentum. When the background is green and everything's going up, guys, if your trigger lines are green, they're going up as well. When colors match, great things happen, guys. Small triggers, large triggers, solid are the faster, dashed are the large, are the slower. They're going to work together to create momentum, guys. And momentum is defined, the strength is defined when the small triggers are up and above the large triggers. When the large triggers are widening, the small triggers are above, the odds are favorable for the market to continue up. One of the little cheat codes here is that they all have to be the same color to have that strength. If your smalls are green and your large are red, you don't have strong triggers. And if the background is red and your triggers are green, you don't have strong triggers. So let everything agree. Agreement is great. And then picture scissors that have opened up, guys. As the momentum increases, the scissors open. This is the best of the best. This is that odds favorable for the market to continue up. This is odds favorable for the market to continue down. You're going to hear in the classroom every day, odds favorable momentum. You're going to see it annotated on charts, OFM, odds favorable momentum. Guys, this is the one that pushes the market. This is the look that gives the market the potential to break those key areas. This is the look that even covers mistakes that new users make. And guys, when I have odds favorable momentum up, when those strong triggers are up, I'm going to use that refinement chart to pinpoint where the small crowd will fail at Fibonacci support. It looks like a tail on a slow chart, that one bar. You're going to be able to pinpoint exactly where this tail is likely to continue. That's going to be your entry point for the high probability trend trade. And then using that refinement chart, you're going to be able to pinpoint Fibonacci resistance, exactly where that market is most likely to continue. This becomes your entry for the high probability trend trade short, riding that wave of momentum. And guys, strong triggers should lead the way. Strong triggers is just, it sets up great things. And if I go to, this is crude oil today, there's that strength pushing down. There's one of those tails. And guys, notice that it breaks areas, that it continues down and it keeps moving. And if I back up a little bit, I have that same strength going to the upside, and the market just continues up with all that strength. So you're going to go back and you're going to start taking pictures, and you're going to say to yourself, man, I can't wait to have strong triggers. What a great advantage. Momentum should lead the way. But momentum dies eventually, right? Momentum slows. And when the small triggers return to the large triggers, when they work their way inside, when those scissors close, if you will, this is what we call a weakening of the large triggers. And the words that you're going to associate with weak triggers are anything can happen. It may bounce, it may reverse, there may be a deeper retracement, an untradeable bounce, there might be a fight. But when the momentum is gone, so is the advantage. When the strength is gone, so is the advantage, guys. And it's not uncommon to see weak triggers on a large chart. Whoop, that's a small chart. To see weak triggers create deeper retracements. When they're weak, you get these deeper retracements, guys. When they're weak, very often you'll get reversals, especially if they're at key areas. And weakness into areas creates problems, guys. And you'll notice a lot of the times that weakness precedes a reversal. So your advantage is gone. The market is no longer likely to push in that direction. So let it be very easy in the beginning. You either have strength or you don't, guys. You either have momentum or you don't. Commit to momentum. Momentum is a wonderful advantage to have. And once you have it, let's make sure there's nothing in the way. Let's make sure that there's room to the profit targets. Let's make sure that we have a clear path, guys. And we do this with termination conditions. Termination conditions, once again, large chart. It's just lines on a large chart. Lines are areas. But it's easier if you say lines, because every line has the potential to stop the market. Potential. It might. It could. It's not guaranteed to. So we're going to look at divergence high lines that print right off a pivot where there's a loss of momentum. We're going to look at divergence low lines, yellow 1-to-1s, Fibonacci resistance, Fibonacci support, and even this mid-band sometimes. And I dropped this picture in the room for you. And if you just refer to them as lines on a large chart, it takes the pressure off of you trying to say, well, this line is more important than that line. This line carries more weight, or this line has a better chance, guys. Any one of these lines, any one of these areas can ruin your fun. And you recognize if they're going to have that capacity with a pretty simple recipe. And everything begins with price reaching the area. Because the large crowd is pushing the market up, and the large crowd is creating momentum. And when the large crowd reaches Fibonacci resistance, whether it's a fib, yellow 1-to-1s, divergence high, decisions are going to be made, guys. And that decision's either going to be that they're going to jump ship and let the sellers take over. Maybe the decision is that they're going to push through and continue up. Maybe the decision is that they're going to get into a fight with the opposing force for the next hour that's going to ruin your fun. But the cool thing is, if price reaches a line, resistance, and the triggers remain below, well, then this area may terminate the trend, guys. It may, it might, it could. But your advantage of a clear path is gone. It's like this giant wall that you see long before you get there. And all you have to do is say, hey, rule number 2 is not met. My triggers are below it. I choose not to trade into that area. I'll either let it break or I'll let the market reverse from it. And then if it reverses from it, everything goes down. You hit the next line. You hit Fibonacci support. Maybe it's a yellow 1-to-1. It could be a divergence low, but the recipe is the same. When price reaches the area, the only thing you have to do is ask yourself, where are my trigger lines? And if they remain above support, no trades into that area, guys. It is a termination condition. It might reverse the market. There could be a big untradeable bounce, and you have to make the choice as a brand new user. I will not trade into this area. I no longer have a clear path. And then if we wait for it to break, well, then you got to know what a clear path looks like. We're using trigger lines to make the decisions for us, guys. So when price reaches the line and the triggers remain above, you're in this moment of pause. I don't have a clear path. Let me relax. All the pressure's off. I know the path isn't clear. And when the small triggers and the large triggers get to the other side of support, or the small triggers and the large triggers get to the other side of resistance, support becomes resistance, resistance becomes support, and that path is now clear. And rule number 2 is met, guys. And rule number 2 will remain met until you hit the next line. So sometimes there's not lines for another 50 points, and sometimes there's lines right behind it, and the process starts over, and it's always triggers to the other side. And guys, these are your 2 options as a brand new user. You either have a clear path or you don't. It's either the advantage or it's not. So when I reach a divergence low and the triggers remain above, this tells me no more short trades. And I said decisions are made at fibs, guys, and I want you to see this. This is kind of cool. There's a fib, and look at the spike. And there's a fib, and look at the spike, guys. That's that fight. That's that untradeable bounce with weakness that you don't want to be caught in. Divergence high, triggers don't break, it pushes down straight into support. Triggers don't break, it bounces up. And guys, you see this at key areas when there's big ugly fights that you don't need to be a part of. Support, resistance holds with weak triggers, it comes to support, it holds with all the triggers up, and continues off in the direction, guys. There's fights it areas. Support starts the beginning. There's one of those tails. I bet that was a nice one. Resistance drops it. And guys, if you go back and you start studying this, you're going to be absolutely floored at how effective these Fibonacci areas are at predicting tops and bottoms. And you just have to use those trigger lines to know if it's actually going to be a top or a bottom. And guys, that's going to lead you to areas with the potential to break. When I teach momentum, one of the things that I like to say is that momentum can break key areas, guys. Momentum can get you to the other side of that key Fibonacci area. So there's going to be a look that there's a trade for. It's going to be your second trade, and it's what we call a 50-50 trade. And it doesn't have anything to do with your chances of success. The 50-50 is a reference to the trigger location. And I'm telling you, triggers are going to give you everything that you need. So price reaches the area and the triggers don't break, and you're like, man, let me sit still for a second. Small triggers smash through with that odds favorable momentum. Now this area has the potential to break, guys, and I'm going to give you a rock solid plan to take advantage if the small crowd decides to fight right here. And then eventually triggers get through and it's broken. But the 50-50 is the potential to break. So rule number 2 is not met. It's not a clear path. So anytime you're looking for this 50-50 trade, this is one of those times where it just really becomes imperative without the clear path that you insist on momentum. So you got to really have rule number 1 down, and then you're going to want the best of the best entry area. So this will be your second trade. This will be your medium probability trade, guys. And if you go back, we're going to go back to the large chart all day for examples. This area had the potential to break, but it didn't. And let's see if we can find another example. They've been pretty solid today and yesterday. Holy smokes. This area had the potential to break, but it did not. At one point, this area had the potential to break, and it did. So I'm going to give you some key items. They're going to help you understand when these areas have the potential to break and when it's better just to stop and wait for a second. So is everybody good? If you reach an area, triggers stay below resistance, above support, is it okay to do absolutely nothing? Is it all right to not enter a trade hoping that the area breaks? The answer is yes. That's a rhetorical question. And this final concept on the large chart lines, guys, really cements the power that these areas have, because when price reaches resistance and my triggers remain below, it's just a termination condition, guys. No more long trades. That's what that tells me. If it reverses the market, hey, Diamond Dave, long time no see. If it reverses the market, if those large triggers go from green to red or from red to green from a no triggers through termination, guys, we're going to call this a strong top or a strong bottom. I am sharing, Lenny. Guys, can you guys see me? I hope we haven't been sitting here not looking at pictures for 30 minutes. Okay, you guys can see me. Yeah, Lenny, do a little reboot. See if that helps out. Fortunately, you've seen this one once or twice. Guys, when a termination where absolutely no triggers break through, if it reverses the market, we call this a strong top or a strong bottom. And we call it that because your buyers were screaming. The large crowd was flying. And when they reached this key area that you knew about before they ever got there, the decisions made were so impactful that it reversed the market, guys. And if your rules are met for a trade after a strong top or a strong bottom, it really adds some fuel to the fire. It really sets you up for the best of the best. So it's just a termination that can become a strong top, guys. So let it be a termination until it's a strong top. Don't try to predict them, just let it happen. And then when you see it in your rear view mirror, you know that this potential long or this potential short is probably the best of the best. So lines on a large chart can create problems, guys. Lines on a large chart are where decisions are made by the large crowd. Lines on a large chart are where we're going to allow the trigger lines to tell us what the situation is. And then there's one termination condition on a small chart. And it's the only time on a small chart where I'll say to myself that rule number 2 isn't met. So if my large chart says up, and my large chart has odds favorable momentum, and my large chart has absolutely nothing in the way, and I decide to come to my small chart, if I'm looking for that entry, guys, 3 divergences in the same price range may terminate the trend. And let's do a little extended run on what exactly divergence is. Divergence means a disagreement. That's all it means. It means a disagreement. And in this case, with your software, it means a disagreement between price, which goes down and comes up about 2.5 bars to finalize the computation. And all it means is that your price, we'll use a white one, is that your price didn't follow, or your momentum doesn't follow price. So every time you see a blue line from a low like that, or every time that you see a magenta line from a high, you know that there was a loss of momentum, that the buyers stole a little bit of the momentum from the sellers. And if they do that 3 times in the same price range, well, that's a termination condition. It may stop the market. You're seeing change on a smaller, faster chart that you won't be able to identify on that slow-moving big chart. This becomes even more powerful with that rule number 1 lesson. When you have those weak anything can happen triggers, you're seeing losses of momentum through divergence, and now you're seeing losses of momentum in those trigger lines. And it becomes more powerful still when that third pivot's higher than the previous from a low, or lower than the previous from a high. It creates a little head and shoulders. Not only could price not push any lower, momentum is also decreasing, guys. So you're going to see this. Look, maybe you're in a short trade. This tells you to get out. Maybe you're looking for a short trade. This tells you not to get in. This is the only termination condition on a smaller, faster chart. Is everybody good? That's rule number 2, guys. We're almost to entries already. I'll put this picture in at the end of termination conditions, at the end of the large chart study, because I want to remind you one more time, guys, that 90% of your day is spent reading charts. 10% of your day is going to be trading. Every moment of your day is going to be spent following rules. That's got to be the key, guys. And when your rules aren't met, and this is what rule 1 and 2 do for you a lot, sometimes the market consolidates, it gets choppy. Sometimes the buyers and sellers are just wound up and they fight, sometimes for hours in between key areas. Your rules are designed to keep you out of these fights. Your rules are designed to keep you on the sidelines as a spectator until one of them has a decisive victory, guys. And the difference between the people that win more than they lose typically, the difference between what I will call a successful day trader and one that's still in the struggle a little bit, very much boils down to the ability to do absolutely nothing when there's nothing to do. It boils down to the ability to sit on their hands and just not give it away. Don't give away money when the rules aren't met, and take advantage. Know your rules so well that you don't miss the trades when the advantages are present, guys. The ability to do nothing will set you apart from the crowd. And that's rules 1 and 2. So at this point, we have momentum and we have a clear path, and we're saying to ourselves, man, it's time to get paid. Let's look for an entry area. Let's go to the smaller, faster chart and be so precise that we can enter with a limit order, that we can wait for the market to come to us. And guys, we're going to use that limit order to take advantage of that little shove that the small crowd creates, and we're going to have it waiting at areas. Lines on the large chart were problematic. Lines on the small chart give the market some place to bounce, guys. And we want those areas to be inside of triggers. So if you say it in one breath, your entry rules for the high probability trend trade, you're going to buy or sell a pullback at an area inside of triggers. But more importantly, we're going to do it inside of favorable large triggers. And this is where that refinement process takes place. I took a picture and I drew a box around 1 bar on the large chart that is showing me direction, that's showing me momentum, that's defining my areas. And inside of that 1 bar, there's a pullback from the small crowd. There's a bounce off of areas inside of favorable large triggers, and there's the beginning of a winning trade, guys. And all of this action is just an x-ray of what you can't see inside of that big old chart. So we're going to take advantage of the small chart, and we're going to do a little pinpointing with rule number 3 on where the market is most likely to continue. And it all starts finding the greatest entry, guys. It begins with understanding that price returns to the large triggers. It's this cool phenomenon. Price pulls away from the large triggers on the large chart. Its large triggers are a moving average. The average corrects itself. Your large triggers are the correction point where we expect price to return to on a large chart or a small chart. Those large triggers are exactly where we expect price to correct. So what we did is on the small chart, you've got your large triggers, the same ones that are used to have the comparison with the small to define momentum. And then we added the large triggers from the large chart onto it. We call them synthetic triggers. They're going to look like they have steps. But the idea is that when the large triggers and the synthetic triggers are one on top of the other, when they're overlapping, when they're wide in the direction of the trend, what you have is you have taken two separate correction points and they overlap in the exact same place. You've cut the correction points in half. This adds to your accuracy. And then when you put a line inside of that point where you expect the price bars to return to, you give the market something to bounce off of. And that's how we create this great entry. So there's an order of operations. When everything is screaming up, guys, we wait for the small crowd to do their thing. That's the reversal bar. The reversal bar signals the beginning of the pullback. Once I get the reversal bar, I'm going to find my favorable large triggers, my large, my synthetic, make sure that they're overlapping. And then I'm going to create what I call the window of opportunity, the point where the market is most likely to continue, the absolute best of the best spot for entry. And for a long trade, it will extend from the highest point of support to the lowest point of support inside of favorable large triggers. I want you to get accustomed to writing on your charts areas inside of favorable large triggers. Because the triggers, we don't expect a bounce. The reversal bar doesn't create a bounce. It's those lines, like you're kicking a soccer ball hard as you can, you're giving it someplace to bounce. Because of the momentum on the large chart, guys, because there's nothing on the large chart to create a bounce, you will activate a limit order at the highest point of support, a tick or two above for that highest probability trend trade entry, and you're just going to wait for the small crowd to get the work done. And if they can, you're in the trade. Trigger lines, you're going to hear me say it all day long. Trigger lines are the correction point. Trigger lines are where we expect price to return to. That's why it's a window. That's why it's not a single tick in this case, which means that any line beyond the correction point, any line on the wrong side of the triggers is not an entry for a high probability trend trade. At this point, price has already exceeded where we expect it to go. The rules aren't met. We don't want to be in a trade down here. And the same thing is true for shorts, guys. Large chart rules must be met. You must have momentum. There has to be a clear path. Those are the two non-negotiables for me. And then the reversal bar signals the beginning of the pullback. It lets me know that the small crowd's going to fight. So I turn my attention to my trigger lines, my large and my synthetic. Are they overlapping? Are they heading in the direction of the trend? And then once I find my trigger lines, and it takes a fraction of a second to do that, guys, I have to look for the lines inside of favorable large triggers. Not the lines beyond the correction point, but rather the lines that are inside of the triggers, above the lowest line of the triggers, below the highest line of the triggers. And guys, this mid-band, this one line inside of favorable large triggers represents the point where the market is most likely to continue. Your limit order will go a couple ticks below it, and this becomes your entry for the highest probability trend trade, guys. You're going to spend a couple weeks with me defining your entries, because great entries create manageable trades. And there's an old adage among traders that successful traders, mature traders, manage their risk before they ever manage their profits. They manage their risk before they ever manage their profits, guys. You are managing your risk by having odds favorable momentum on the large chart, and you are managing your risk by making sure that you're not trading into those key areas, and you're managing your risk by insisting on the pullback to areas inside of favorable large triggers. And once you know where the market should continue, you understand where it shouldn't go beyond that correction point. And this is where your first stop is going to go, guys, outside of that window of opportunity, beyond those trigger lines, 4 or 5 ticks. And you're going to say to yourself, I have a trade that wins 70 to 80% of the time. I have a pattern that's been proven. I've studied it. I've gotten feedback on it. And I know with no uncertainty that if the small crowd pushes beyond this correction point, 4 or 5 ticks, I no longer want to be in that trade. I'm going to accept my small loss. I'm going to let it hit my stop, and I'm going to wait for the next trade to materialize. And when you go back and study, when you go back and learn these entries, and you start to develop trust in these entries, you don't get upset about being stopped out every now and then, guys. You'll go back and review your rules. And if you get stopped out of a trade and you're like, yeah, but I had momentum and my path was clear and I took the perfect entry, you're just going to say, whatever. Small losses are a normal part of a positive equity curve, and I know exactly how to keep them the smallest. And then if it does go in the direction of your trade, you get that reversal bar, that confirmation bar saying, yep, here we go. You can reduce your risk 2 ticks below for a long or 2 ticks above for a short. And guys, you're going to pinpoint these great entries, and you're going to take these amazing entries. And even if it doesn't work out, if they're nice enough to give you that bounce, you might lose 30 or 40 bucks a contract rather than having 200-300, like the wish stop way down here. I sure hope they don't break everything. You'll get to the point where you're saying, man, they already told me they're going. I'll keep a couple ticks on it, and if it doesn't work out, that's cool. I'm out. I'll wait for the next trade. So you've got to study this. You've got to build trust in this. So I'm going to ask real quick, are there any questions? Because momentum, most people tend to get that in the first day. It's that huge separation between the smalls and large. The bigger it is, the stronger it is, guys. Smalls and large get above resistance. It's behaving as support. The path is clear. We have not reached the divergence high. We have room to our targets. And right here at the top of this bar is the beginning of the pullback. I talked about these tails. This is your study tip. If you go back and you circle these tails, if you go back and you circle a tail, because it's confusing as hell, David. For the brand new user, the market flow chart gives too much information. It gives too much information, and the reality is, and this is a beginner's class, right? This is people that aren't chart readers yet. These are people where simplicity pays dividends. But the cool thing is, David, is that if you ever have any questions about a range chart, if anyone in this room ever needs help with that market flow entry or whatever, all you have to do is post a picture. It's not off limits, but you don't need it to have a successful trading plan. That's why. It's just a confirmation chart, and if you can't get your rules right on 2 charts, it's just going to confuse you, and I see it every day. So I try to keep it simple. Guys, this is how you're going to study these trades. If you circle a tail on the large chart when the rules are met, and it lines up with areas inside of favorable large triggers on the small chart, guess what? You have a high probability trend trade. And this is one of those ones where you have to take the picture. This is one of those ones where you go to my favorite looks and you say, I'm never going to miss this setup. This is the best of the best. This gives me everything that I want. And we talked about studying them so that they become easy. This is one of the pictures from the spreadsheet, guys, and you'll notice that it's odds favorable. We haven't reached the area, and it pulls right back to support inside of favorable large triggers. And for short trades, it's the exact same thing. It's odds favorable. There's nothing in the way, and it pulls right back to resistance inside of favorable large triggers. So I encourage you guys, focus on the entries first. Focus on getting in where the market is most likely to continue. Develop that trust. And then, guys, once you have that, once you understand these 3 very basic concepts, it's going to open the doors for the rest of you. And just like David said, you know, there's a range chart, right? There's 21 charts, there's 35 charts. There's a million ways to make money with the software. But if you don't understand the basics first, the average user just confuses herself. So I try to keep it as remedial as possible, as basic as possible, guys, and the easiest way to get to where you want to be, outside of posting your pictures in the room, outside of using that spreadsheet, is create recognition through repetition, guys. Grab your camera and go take 25 pictures of strong triggers and 25 pictures of weak triggers so that you never confuse them. Go take 25 pictures of a clear path and 25 pictures of termination conditions so you don't get them confused. And that's your very basic. And then add in those 50-50 looks, add in those high probability trend trade entries. And guys, I'm going to tell you right now, you'll get to the point to where recognition is easy. If you go through this task, if you fill out that 101 spreadsheet, and I've done so much work for you here, with these pictures, you're never going to get confused between strong and weak. It doesn't mean that you won't make a mistake and trade weak triggers, but you're going to know that you're trading it. And if you stop and look at your chart, you'll never get confused between a clear path and a termination condition. And then once again, you might make the mistake of trading into a termination condition, but you'll be able to go back to your picture. And you'll be able to say to yourself, oh, that's where things went sideways. I traded into a termination condition. So taking pictures when the market isn't moving creates recognition, but you still have to go through the task of piecing it all together to create a trade. And you'll get there quicker if you annotate the whys. Why are they strong? What's the advantage? Why is the path not clear? What's the advantage? I got an email last night from somebody who had an amazing list of strong triggers, weak triggers, clear paths, terminations. They had done a lot of work, and there was no doubt through their pictures that they're capable of recognizing. There's no doubt through their pictures that they're capable of understanding what creates them. So now the next task is developing the patience to wait for them. Developing the patience to wait for that momentum, to wait for that clear path, and then jump on that entry area, guys. The difference between successful and unsuccessful, more often than not, is the ability to do nothing when there's nothing to do. But the cool thing is the better you get at reading your indicators, the more opportunities you're going to see. So I'm going to give you guys a whole bunch of stuff. I'll do it all at once. But the chart reading 101, guys, give yourself some homework this weekend. Knock that out. And then I'm also going to give you the high probability trend trade checklist. This is 2 pages. The first page is the same 4-item checklist. Print it out. Print 10 of them out. Grab a big Sharpie marker and make sure that you can mark yes to each of these, because if you can, I've never had anybody do worse than 70% winners ever. You still have to manage them, but at least your entries are going to be solid. And it goes through it. Strong top or bottom. Odds favorable. Notice that it says both charts. I like that. No termination conditions, and then it uses the language. Area inside of favorable large triggers. So the second page shows you a strong bottom. It shows you momentum versus weak. It identifies termination, potential to break, and clear path. And it gives you the whole rigmarole for identifying your window of opportunity where the market is most likely to continue. So you'll want to take this one. Use it to police yourself every day. Use the checklist up top. Get in the habit of writing these rules in completion for every trade that you take. Every trade that you take, talk about where it's coming from, talk about momentum, talk about your path, and define your entry. And if you do that, if you start doing that right now, you're going to stop making as many mistakes, because you're going to begin forcing yourself to speak in terms of advantages. And then finally, the KISS plan. The keep it simple, sucker plan. And guys, this is a stepping stone. My brother added that, and I'm so glad that he did, because a lot of times people are like, I can't do this. My rules say that's no trade. My rules say that I can't do this. That KISS plan keeps me out of so many trades, and I'm so mad at it. Guys, this is a stepping stone. This KISS plan is designed to turn you into a chart reader. This KISS plan is designed to create confidence, to create the ability to follow a plan that's capable of giving you winners more often than losers within your first 30 days with Nexgen. It optimizes your chances of success with the high probability trend trade, which means this is the best of the best way to take it. Why not focus on the best of the best before you look for everything, guys? Because through simulation, study, class feedback, underlined class feedback, and continuous practice, guys, you're going to create your own plan. You're going to create a plan that suits your needs, and it's going to be based on your ability reading the indicators. So don't forego the live feedback 15 hours every week to make you a better chart reader. Anytime you have a question, drop it in the room. We'll work on the chart reads, guys. Your simple plan for consistency in the beginning for the brand new user, teach yourself to not fight the large chart. Teach yourself to not fight the momentum created on the large chart. Teach yourself to not trade into those areas on the large chart. Teach yourself a little bit of restraint on rules 1 and 2, making sure that you're adhering to that. And guys, your entries are going to change dramatically once you understand those advantages. But initially, you're defining the high probability trend trade entry. So you've got all the rules. You've got pictures of all of them. And your first 20 days, guys, is finding the entry for the high probability trend trade. So when we do that, I'm going to go through right off the spreadsheet here. We've got the entry sequences. Insisting on the large chart rules being met. Odds favorable, clear path. Let's wait for a reversal bar to signal the pullback. That is not your entry. The pullback tells you, the reversal bar tells you that I have to find those triggers. The tighter they are, the smaller this box is going to be. And my trade originates from areas inside of triggers. So the next step is to find those areas, to create that box, to identify where the market is most likely to continue. Resistance can be red Fibonacci, magenta midband, or yellow 1-to-1s. Your window is from the closest resistance to the further resistance inside of favorable large triggers. Guys, this is all defined right on your spreadsheet for you to study. These lines outside of the triggers are not a part of the window. And guys, all you have to do is develop the trust to activate a limit order right at the bottom of that window. Because this chart is screaming with nothing in the way. We're not going to trip over a couple pennies to save a few dollars. We're going to get in low. We're going to know where our stop goes, where the market shouldn't. And if that small crowd pushes up, guys, guess what? You are in the highest probability trend trade ever. You have momentum, a clear path. You're in where the market is most likely to continue. You know exactly where your stop shouldn't go. And guys, you have a plan capable of success. But once you take that great entry, you have to do something with it. You have to manage it. This is the scary part of trading, guys. You're going to be good at entries in your first couple weeks. If you keep it simple, you're going to be able to nail where that market is most likely to continue. But the thing is you're going to have to overcome a couple fears and develop some trust. You're going to have to learn to trust the large chart. You're going to have to learn to trust that entry. And that's where management comes in, guys. And you're going to create a different management plan based on your ability reading the indicators. But in the very beginning, as you become a chart reader, as you develop a little bit of trust, as you work through those emotions that day traders work through, it makes sense to let your management be as mechanical as your entries. If then, that's all. If this happens, if my rules are met and I enter the market at the area inside of favorable large triggers, then my stop goes where the market shouldn't. And my only two options are either I get stopped out, I take a loser, it's a normal part of a positive equity curve, I'm okay with that. Every 10 high probability trend trades I take, I expect to lose 2 to 3 of them. It's a cost of doing business. But more often than not, because it's a pattern that's been proven, I'm going to get a reversal bar in the direction of the trade, guys, and at which point I will reduce my risk 2 ticks above that reversal bar. If it's a long trade, 2 ticks below that reversal bar. And once again, I'm in the position of sitting on my hands and doing absolutely nothing. And it's either going to stop me out for a small loss. Small losses don't hurt, guys. Or it's going to go to my first target. And for you KISS plan users, for my brand new users, the whole goal of this plan is to create confidence. So your first target is $100 in the distance, guys. $100. Price reaches that. On crude oil trades, very often price reaches that on the reversal bar that's going to get you to break even. And once it hits that $100, Ninja tells you that you're there. And once you hit that $100, your palms kind of stop sweating and your guts stop twisting and you stop fidgeting and you're like, man, I just got paid and I have absolutely nothing to lose. You know what? I think I'm going to learn to trust the large chart. I'm going to sit on my hands and do absolutely nothing. And it's either going to hit my second target or it's going to get me break even. But no matter what happens at this point, I'm $100 better off than I was 5 minutes ago. And if it hits the second target, it's $200 away from your entry. Guys, this is a $300 trade. This is a $300 trade with the advantage of momentum. A $300 trade with nothing in the way. Having entered where the market is most likely to continue. And guys, $300 a day is a $75,000 year. If this is the best you do every day, even if it's 3 times break even and only taking 100, $75,000 a year. And I'm telling you right now, guys, day traders are under this illusion that every trade has to be a home run. Day traders have this idea that every trade's got to be worth $500 to $600 or it's not worth their time. And that's okay. There's different strokes for different folks. But this other thing right here, guys, this is your daily goal times the number of trading days. $300 a day is 75 grand. $100 a day is still 25. It won't be difficult for you when you're a chart reader, when you have a solid plan, to find yourself somewhere in this range. Between $7,000 and $1,000 on a 2-lot, guys. It's not unreasonable. It's not even excessive. And it's not hard to get into 6 figures with a solid plan, with a good management plan. But you've got to practice and you've got to learn to commit. So remember that the goal is to get paid. And once you're good at the high probability, the KISS plan also gives you your first medium probability, the 50-50 trade. And the 50-50 trade is void of a clear path, which is why it insists on a strong top or bottom, which is why it's mandatory that you have strong triggers on both charts, which is why if you see divergence, you don't take the trade. This is the most lost trade that new users show me because they refuse to believe that divergence kills the trade, but it does more than it doesn't, guys. So this is how to optimize your chances of success with the 50-50, and then you'll start to find things where maybe you create new rules that suit your needs based on your ability reading the charts. But that's the first hour, guys. Look at that, 10:01. That's got to be a record, huh? So I'm going to give you guys a slew of Friday gifts. I'm going to give you my spreadsheet. I'm going to give you the PowerPoint that I used to teach. I'm going to give you the Chart Reading 101. I'm going to give you the daily goals. I'm going to give you the high probability trend trade checklist and the KISS plan, guys. And I'm going to drop every one of these in the chat box right now. And all you have to do is download them. You can click them, drag them over to your desktop, but you now have every tool that you need to be successful with the software. The only thing that I did not drop into the room for you guys, the only thing that I didn't give you was repetition. The only thing that I didn't give you was experience, guys. And that's what you have to come up with. You have to be able to go back and see momentum. And just for grins, let's just see what that one looked like, just for the fun of it. I know it's into a termination, but let's see if these patterns repeat themselves. Scrolling back and I'm looking for that circle. Where was it? It was right into an area of resistance, guys, right to that correction point. Sure enough. Indecision overnight. Here we have odds favorable. Everything is up. I'm going to do 2 circles right here. All I'm doing is going back. Notice how resistance broke and it behaved as support. Let's go see what these circles look like. Support inside of triggers. It did overrun a little bit. 0.5. Your stop may have kept you safe there. And then once again, support right there at the triggers, guys. So all we're doing is we're creating trust. All we're doing is we're establishing recognition. This is my first hour every day. Every day. To know the rules is amazing. To commit to the rules is outstanding, guys. And to not have rules is setting yourself up to trade with emotion, to trade with failure. So one more thing I'm going to give you, and then I'm going to take a break. Come on, Microsoft Word. Before you sit down to trade, when it's time to go live, guys, when you're on simulator, it's okay to be confused. It's okay to make mistakes. It's okay to not know your plan like the back of your hand. It's okay. That's what simulator's for. Practice. Get feedback. But when it's time to go live, when it's time to actually have something at risk, guys, you got to know why you're going to enter a trade and why you'll exit. These two things, this is what we call a trading plan. And the people that trade without a plan are subject to emotion and fears and opinion. So commit to having your rules met. Start on day one. Take the correct trades as often as you can. Commit to having the rules met as you learn them. And the rules are nothing more than patterns that have been proven to win more than they lose. The high probability trend trade is not the only pattern that you can prove wins more than it loses, but it's the one that teaches you to recognize the advantages. And the more consistent in your actions you can become, the more consistent in profits you'll typically become, guys. And the process yields results. And I can't stress that enough. The process yields results. And the rules help remove the emotion. And it's the same thing as if you played Little League and you went to the batting cages. You can't strike out at the batting cages. You can't lose the big game at the batting cages. But what you can do is learn the mechanics that are going to put you in the position to succeed on game day. And the same is true of the driving range, guys, or practicing your slap shot if you're a hockey player, or kicking, penalty kicks as a soccer player, or practicing your free throws. So practice on simulator. Learn what it looks like. Learn what it feels like. Start building those repetitions. And then, guys, knowing what it takes to get you out. This is why I believe that simplicity pays dividends. Because if I'm only thinking of one trade, initially, I've got solid rules to get in and I've got the KISS plan to get out. And then as I grow with the software, there's going to be other reasons that I'm going to manage a trade, but I don't have the chart reading to do it yet, which is why I try to keep it simple. So if I'm in a high probability trend trade, there's a very specific set of exit conditions. And if I'm in a 50-50 trade, there's a very specific set of exit conditions. And I'm likely to confuse the two if I try to catch too much before I'm ready. And then if I start adding in momentum trades and HVA trades, guys, it gets confusing. So keep it simple in the beginning. This is a marathon. You'll be amazed at how smart you are 30 days from now if you try not to be too smart for those first 30 days. So, guys, that's my first hour, every hour. It's really, really quiet. I know it feels like a lecture, but we're going to get into the second hour now. I'm going to go take a break, and then we're going to get into the second hour. And when I do, we're going to look at the charts that you guys posted. And every chart, we will relay back to momentum, a clear path, and an entry area. Every chart, guys, if you really want feedback, you need to talk about those three concepts. You need to tell me about the momentum. You need to identify your clear path. And you may get it wrong. That's okay. That opens the door for a lesson. And you've got to show me where you entered. Don't tell me, oh, I got in and I made $1 million. I don't care, guys. Doesn't matter. What I do care about is seeing where you entered so we can make sure that it gives you the highest chance of success. What I really care about is seeing where you exited, because there may have been a better way to do it. There may have been a way for you to hold on for more. There might have been a way for you to not give so much back. So show me where you enter. Show me where you exit, guys. The most valuable tool you can do on your small chart is right-click on it and go to Data Series. Scroll down to the bottom and make sure that you have text and markers under Plot Executions. And what that's going to do for you is every time you enter the market, it's going to show you exactly where you entered, and it's going to show you exactly where you exited. And guys, you're going to use this as you begin to develop your management plan. You're going to use this to see just how good your entries are. And when you show me this, you'll be amazed at the information that I can pull out of it. Because you'll type on the chart, I exited at the pink 1-to-1s, but your stop will be way up here. And we'll get to talk about it a little bit, guys. It kind of keeps you honest on what you're doing. So watch crude oil. It's going down. Everything says down, and sure enough, it's going down. When I come back, we'll start clicking on charts, guys. So go stretch your legs. I'll see you in 5 minutes. I know that wasn't 5 minutes. I stink at taking breaks. We're going to go through and we're going to start clicking on pictures, guys. I'm going to scroll up to the very top. And I will start talking about advantages. That's all we're going to do. Bum, 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 bum. I like it. John Novak was in there dropping stuff in yesterday afternoon. You guys should go check it out. All right, Red Rob yesterday afternoon. So this is where entries help. And Rob, that's kind of what sparked this one. You said you were down $700, but you watched the 13.2 and the reversal bar marker. And I'm not sure what that means. So you doubled up your position at 78.03, which means that right here, I'm assuming, you doubled up your position directly into termination conditions. You said that you still had odds favorable and a clear path, so I'm confused on how you had odds favorable and a clear path. And one of the things that's going to be challenging, guys, adding to losing positions is one of the things, especially as you go into these prop firms, adding onto losing positions, not always the best idea. So it looks like you went long directly into fibs, directly with resistance. And Rob, just a heads up, brother, you shouldn't have large and synthetic on your large chart. So I'm not sure what you're looking at on both. But the large chart looks good. There's a lot of momentum, and I'm assuming that you got in somewhere down here initially, which would have been awesome. And then when it gets to those terminations, it's okay to get paid and cut ties. Good job. Joel, odds favorable, 50-50, perfect entry. Break even. It didn't work. So one of the things, guys, and this comes with all the love in the world. If I don't beat you up, don't beat yourself up. The more shit talking you do to yourself, the harder this becomes. Speak to yourself like you are a 5-year-old that you're trying to teach to trade. Joel, you had momentum. It had the potential to break. You took a shot. It didn't work. That's all. Trades don't always work. It's okay. If they all worked, guys, oh my gosh, how boring would that be? But the key is, why keep going? Right? If are the rules still met? They are, I suppose. But that's not the right stop placement. That's right in the middle of the area inside of favorable large triggers. Guys, if you're going to take another shot at a trade, and the rules are met, you have to follow the rules the whole time. We get excited sometimes. The adrenaline kicks in. Guys, learning the rules isn't the difficult part. Adhering to the rules is the difficult part. So Joel, all right, I'm going to scroll to the bottom real quick just in case there's comments on this. When you get frustrated, and this is for everybody, myself included, when you get frustrated is when you need to step back a little bit. And I believe in truth in annotation. This is not a good top or bottom. That should be a no. This is not odds favorable momentum. The smalls haven't even created the separation yet. That should be a no. The smalls are outside of the large on the far of one, that's for sure. But the challenge is here, Joel, is that you're directly into a termination condition when you take this trade. And you have divergence. Your large triggers haven't even rolled, right? So you're recognizing all your triggers are green. You're going through. But guys, if you're going to use a checklist, be super honest with it, right? Because this is how you're holding yourself accountable. And if you're willing to lie to yourself, then you're going to convince yourself that you had a clear path. And you're going to convince yourself that you're doing something right. And when you're taking away advantages, And I don't mind this trade at all. I think it's a good looking trade with that immediate momentum. But I think that if you want to be consistent, guys, if you want consistency in your efforts, consistency in your actions, then there has to be consistency in your annotations. You've got to be truthful with yourself so that you can go back and study it, so that you can recognize these advantages, so that you can make sure that you're repeating the things that are bringing you success, and maybe you're avoiding the things that are taking that success from you. And Joel, if you just go back and annotate this one with everything, who knows? You may come up with a brand new trade that is absolutely rock star. But you've got to have rules, and you've got to live and die by your rules, guys. And sometimes living and dying by your rules means that you're going to miss out. Sometimes it means that you're going to have to get out of trades before the trades are done. Some Yahoo took this one this morning. I like the annotation. Bad top, which means that when it's not a termination that reverses the market, this great termination suggests that it may continue up. So when everything rolls and goes green, there's the pullback right to the area, right inside of favorable large triggers. Half off at trouble, second half off at the next trouble, exit with the third divergence, guys. This one fit my rules 100%. This one fit my plan 100%. And I put this next picture in there because my rules said no more trades. The indicator said more up, but my rules said no more trades. And sometimes it's not my money. And then this is where we get into the mental side of it. And I wanted to share this one as well, guys. It made it to my original target, but my rules took me out right here. But it made it, right? So I've got two options. I can be upset and pissed off. Oh my gosh, I didn't get my entry or didn't get a re-entry and I didn't make that extra money and this sucks. I hate day trading. I have to change my rules. Or I'm just happy that I followed my rules, right? My rules said that this was my exit. And for some reason, and guys, this is huge. For some reason, traders are more inclined to be pissed off about making almost $700 in 4 minutes because we start to feel like the market owes us more. We start to get fearful that there'll never be another move. Guys, it was 7 a.m. There's plenty of time in the day. And I'm already over my goal, right? Or 125 bucks short of it at that point. So when you go through, talk about rules, guys. Write them on your chart. Be super honest with what you see. And if it doesn't fit the high probability trend trades, guys, talk about why you did it so that you can repeat it, so that you can take these trades and repeat them over and over. And when news prints, you may not be able to move your stops and targets, guys. There's my momentum trade. There's my first exit. That was $200 per contract. And then this is how fast the market was moving. My stop was 98 right here. It finally registered all the way over here. News creates erratic stuff, guys. But 2 trades, both rules met, goals met. I don't have to trade after class. I can go swing golf clubs. All right, D, let's see what you did. Odds favorable momentum, strong triggers, large triggers, actually below the small trigger. Nope, above the small triggers, you reverse it on me. Space between like scissors, rule 1 met, I love it. Not a clear path. Neither trigger has broken through the area, the 1-to-1s. Rule 2 not met. And this is the S&P, D. Divergences everywhere, screaming, do not enter, sit on your hands. You're witnessing the huge fight, right? So D, one thing on the S&P is I don't give these small swings a whole lot of credit because they are that. They're very small swings. So when we talk about the areas on a large chart, guys, until you get to the NASDAQ, because the NASDAQ large chart is a 34, not a 13, I keep it pretty consistent. These are the only ones that I'm willing to commit to as termination conditions. But what you did is you did an amazing job recognizing that the small chart was telling you that something was up at that area. 3 divergences says don't do it, and you didn't, and that's outstanding. And the fact that you're taking pictures when the large chart's trying to lull you in and the small chart says, hey D, don't do it, you recognized it, you avoided all of that nonsense. Absolutely beautiful job. Adherence to rules. It's hard, right? Because it means you're going to miss stuff every now and then. It means that the market's going to go without you. It means that you may not get every penny in the market. So beautiful work. And then Jen, small and large smash through. Your arrows always throw me off. So you do have the clear path. Everything says down. 3 divergences, and you say, nope, not yet, not yet, not yet. And then when it all gets south of trouble, you capitalize. What amazing patience. The large chart says down. The large chart says that your path is clear. The large chart has the smalls right on that edge. And those 3 divergences say, Jen, it's just too soon for a short. We might push up a little bit. And I love this because the large chart never changed. You just let the small crowd work it out. And then just beautiful. Way to capitalize. Nice trade, Jen. Does everyone see how that works? 3 divergences may terminate the trend. It keeps you from getting beat up in this area. And then once everything agrees again and you're below trouble, there may be an opportunity as you progress in your chart reads. That's some next level patience. Gap theory says when price reaches the midband and the large triggers are more than a full bar away, the midband is a termination condition. D, can I steal this picture? I'm going to steal it. I'm going to put it into my spreadsheet under patterns that repeat. No, you know what? I'm going to put it under termination conditions. And I'm going to call it midband as a termination because the gap theory is something that people have to learn, right? So what D did, and guys, I want you to notice something about these pictures. Sorry, D, I'm going to put you on a pedestal real quick. D said, I don't have a trade, but let me annotate my chart anyway on why I don't have a trade. As hell-bent as I am on understanding when I have rules met, I want to be just as diligent as being able to recognize when rules aren't met. And she does it twice. Outstanding. And I notice that you're on the S&P. It builds a lot of patience. When your only options are rules met or rules not met, it's pretty crazy at how patient you become, especially when you start avoiding losers because you're not trading when your rules are broken. It's pretty awesome. All right, here we have... Who was this? Was this you? Jen? No. Hold on. I don't know who this was. Was that Jen? Nope, that wasn't it. We already saw that one. Sorry, I get confused sometimes. This was Kenan. Sorry, Kenan. Strong top, odds favorable, triggers through area, all colors agree, room to the next target. Looking for area inside of large triggers, you chose 77.56. Stop 77.65, it's right above the reversal bar marker. Take profit before the next area, you choose 77.44. So let's go through it. The momentum is down. The path is clear. The only thing that you didn't have was the area right inside of triggers. You make the choice at the mid band just beyond, and you give it 9 ticks. That's a great trade. Everything says down and it went down, Kenan. It's weird how that works sometimes, right? Everything said down and the market went down. Your indicators said, hey, everything is down. All right. Is this Erla? My short-term memory is gone today. I don't know what's going on. All right. Bad top, termination, everything rolls odds favorable, clear path. And you let it confirm going in the direction. And pretty easy money all the way up, Erla. Great job. Really well done. And I mean, momentum, clear path for the win. So when you guys go back and study what worked today, go back and study everyone's pictures. Momentum seems to be winning an awful lot today. Clear path seems to be paying a lot of dividends today. Odds favorable, clear path. Don't see an entry on the 5-1. Critique me. Well, you don't have odds favorable until up here. And it's breaking the areas, and yeah. That's it, Rob. Your rules weren't met. Am I getting a chance to add to my position since you still have odds favorable momentum? So, Rob, I think we need to talk clear path, brother. Then unscrunch them. Kenan, do you know how to unscrunch them? So many of you guys show me charts like this, right? And you're like, oh, you can't see anything. So Kenan, on the price bars or the timestamps, click on it and drag it back and it'll spread it. Drag it back. It'll spread it. You can make these things huge, guys. It's hard to trade like this. You don't need that much information. What do you need? You need areas. You need this, especially in a downtrend. So scaling. Guys, scaling's one of those skills that pay dividends. Make your charts readable to you. And let me go. Moving and scaling ninja charts. You know there's instructions, right? Someone said it the other day, it's those things that fall out of the box onto the floor when you buy something new. So you can do the same thing with price, Kenan. Is I can go on the price bars and I can squish down. I can spread them out. And if you need to get it kind of back into view, click the F up here. Boink, and it'll bring you right back. And the same thing is true as if you lose that most current bar, this arrow will get you back to the most current bar. So practice scaling a little bit. Make them readable. Remember, you don't need 7 miles of gray, right? As long as that most current bar is there, it just doesn't matter what's over to the right. Good stuff. All right, Rob. Price reached an area. Are you in here, Red Rob? I'm not sure what your rules are for termination conditions, but for me, when price reaches an area and the triggers don't break, I don't have a clear path. There is absolutely nothing clear about this path here. So what you did is you jumped into the market directly into termination conditions. And so far it seems to be working, but I wouldn't be surprised to see a big ugly bounce right off of 78.20. And let's see. Is that where the market started its rundown? I think it was that one right there. So termination conditions, man. There's your gap theory again. Price reaches resistance, large triggers a full bar away. So go through it, right? And really, this is your homework for the weekend. Go take 20 pictures of price reaching an area and the trigger's not breaking, so you know when your advantage is gone. And that's the same one that you posted yesterday. And then Morgan, let's see what you got, bud. Failed chili dog. Odds favorable. It clears. You hop in and it kills you. It happens. Guys, if you're going to jump into trades, they're going to lose momentum every now and then. Just didn't work. It had the whole recipe, Morgan, the entire recipe for that trade. It just didn't work. And that one did. Beauty. Cleared trouble. Get in with odds favorable. Get out before things change. Absolutely perfect. And then Morgan, if you feel like studying over the weekend, this right here is your momentum trade, brother. Small triggers break through, snap back to support, and go down. This is the one that Nexgen has rules for. Right here. I like the chili dog. You were disappointed in yourself afterwards. What? This one? This is great. Oh, the other one? Why were you disappointed? Oh, right here? When you had odds favorable in the clear path and it pulled right back? It's because you were too busy reveling in this one. That's pretty normal. You were so excited about the money you just made back that you forgot to make the easy money. This is nice, though. Nicely done, Morgan. A little more consistent each and every day. All right. Diamond David. Been trying to use the 8-range entry chart. You believe you put the limit order close to the magenta line for short or green for long. You find many times price doesn't come close enough for entry. Miss entries many times. Doesn't seem dependable for just that. Am I missing something? Absolutely you are. So let's go figure out what it is. Are you with me in here, David? Oh my gosh, you got these charts. Okay. It's going to take me a second to decipher. So trade number one. Why do you have so much on your charts? Lines of slow inward action. Probably should have taken off 2 contracts at last fib here. Weak triggers at a fib. I don't disagree. Trade number one. Okay, there's your short. I don't see it on this chart though. So your short's not on this chart. So this is only 2 charts. Is that right? And I can't see where your entry was here, but it looks like it's directly into a fib. Is that your exit? Okay, there's your entry. Odds favorable momentum. And it didn't hit the fib yet. And you take the pullback. Are you sure you didn't take it on this bar and not that bar? $843-ish. $843-ish. Diamond David, I think you took it on this bar. But this one, hold on. I'm going to do a little inspector detector here. 54.82 and change. 54.82 and change. Okay, so we're in with odds favorable. You're in with the clear path. It hasn't reached there yet. And it's going down, and 79-ish represents support. 79-ish divergence at support. Great exit. Nice entry. A little late on the entry. I would have used that mid-band. Okay. And then it goes down. And you give it all back. Every penny. Okay. So let me ask the first question. What are your rules for exit? Do you have them? Do you have any? Or do you just rely on the gut? And let me tell you why I asked that. Because you hit support and you take your first exit. Okay. So you were hoping for a home run. One of the cool things that you can do, David, and man, it's up to you, and I know you guys are watching Ben hold on for all these home runs. Ben's got a great plan. If I'm in right here, right, I can move my stop behind this pivot. If I take one contract off here, I can move my stop behind this pivot. If I'm holding for the home run, I get the perfect trend trade. I can move my stop behind this pivot, and this represents the line in the sand. This is where you're witnessing the push down. You're witnessing the follow on the 21. You're seeing everything, right? And then if it gets back above, is there any reason that you can't re-enter? And where's your 21 chart in all this, right? If you're relying on it, what did your 21 chart say? Man, if you went from 69 to 83, you lost, brother. You gave back 14 ticks. You gave back $700. So what did it look like during this trade? Right? Like if that's an integral part of what you're doing, why wouldn't you show it in the trade? Because your large chart said all day long, weak triggers, and it doesn't feel like it's lining up right. I could be wrong. Because here's your bottom at 69, right? And here's your bottom at 69. And you had weak triggers, and you've got fib retracements. So show me a picture of what the 21 looked like. Because if your 21 wasn't odds favorable momentum, it looks like your 21 was directly into support at 73. Because that's a 21 fib, right? So you were directly into a termination condition, it would appear. I love it. You know, if you can read every one of these indicators and these MACDs and these dots and all of this stuff, then nothing but love to you. But if I'm gonna fill my chart with stuff, it better have a reason, right? There better be a reason for it. And I didn't see how market flow came into that last one. I don't see how you used market flow because it doesn't line up with it. So let's go to trade number 2. I love it when they look different though. So let me figure out where your entries are. You went long against everything. So let's look at a timestamp. I don't have timestamps. That makes it a little harder for me to line it up. So you went long at 54.80. You went long right here, and you traded directly into a termination condition with no triggers through, and you gave every bit of it back again. So far we're 2 for 2, right? Reaching areas on the large chart and giving it all back. So Diamond Dave, in 2 pictures, I'm starting to get a pretty good idea of what your challenge may be. Let's see. You went short with odds favorable. Is that right? These don't make sense to me. You went short with everything up. Is that right, or did you go long, David? No, this is Ninja Trader. David has every indicator money can buy on his chart. So this looks like you went short. Is that right? Or did you go long? I don't see the long. I only see the exit. So you went short against everything being up off of a termination condition. I'm reading that right? Or did you go long somewhere before that? Because that's an exit. I don't see where you entered though. I don't have any idea. Okay, so you entered with everything down. I'm going to oh man, I'm going to give you the coolest trick ever. Are you ready, David? I'm about to change your world, brother. Thank you for posting these. These are cool. These are great charts. Great charts for me to look at. On right chart at yellow dots. All right, hold on. So you went long right here. Third entry today, saw near fib on 5-1 range, entered too soon, drawdown was 800 before taking off upside twice. So can I really just kind of Sunday school it here real quick? David, you're working way too hard. I think. And since you don't have any rules on here, it's hard for me to discern. But let me show you something. This is kind of cool. Your small triggers say down. Your large triggers say down, right? And when these say down on the large chart, man, this is that big broad stroke of a brush that's saying, David, be patient, brother. Just wait. In your entry area right here, I want you to see something. When all of your charts say up, that's when it goes up. As long as these say down, I'll be damned, it keeps going down. So what's your rule for entry? Because if I wrote, and this is, people hate it when I do this, but I do it anyway because I've got a little bit of my brother in me here. If you were to write a rule for this entry using the large chart, David, would you say to go long, I need both small and large triggers against me to take a long trade? That just logically, that doesn't make sense, right? To go long, I need the small and large triggers for me, right? So one of the things that I don't notice on your charts, and I think it would pay dividends, is let the large chart lead the way. So, and here comes your lesson for the range chart. The most valuable lesson that I can give you. Let me minimize this a little bit, and we'll keep going through everything because I love this stuff. Market flow signals defined. When trend trade rules are true, after termination top or bottom is true. Okay, so did I see your three? Okay. So here's the deal though. Are you ready? I'll look just on your range chart. Why did you enter there? Your large triggers are down, your smalls are below the large, so you let a green line get you in. Why didn't you let a pink line get you short when everything said down? Because in your brain, David, what you're saying is, oh, Nikes, I better go long because I need to be first. Because what if it goes up without me? But everything said down here, which means that most everything said down on your small chart, which means everything says down here, right? And I want you to see something. Once these triggers roll, it starts to get easier. You're just a little soon. You're anticipating something that none of your indicators are telling you yet. And there's just no trade here because there's no rules for a trade here. Don't have any rules for the market flow chart that says fight everything. In fact, every rule that I have on the market flow chart says that these triggers have to roll and be on the correct side of the large, which means that you never even should have been thinking about it until things started happening here. And then it went right into resistance and retests. And then it comes up and everything agrees. And David, this price where everything says up is the exact same price as everything saying down. And you don't have to sit through all of this. Just wait for the agreement. Wait for the divergences. That was your third divergence. Small triggers roll. I know, right? So don't let this chart seduce you. Don't let this chart seduce you if this chart says no. Can I ask you some questions that you're not obligated to answer? How did this help the trade? I'm just curious. How did this help the trade? Because it looks like the pressure's down. And I don't even know how to read this, but it looks like the pressure's down. And then right here, it looks like the pressure's up. So did you fight this indicator as well? I don't even know what this is. It says MACD, EG divergence. I don't know what that is. I will 100% admit my own ignorance in some of these indicators. But that looks like it's going down, and that looks like it's going up, and that kind of helps, right? That cements it. Okay. You know that the MACDs with the Renko bars are rendered useless down here because it does the calculation for you. My brother told me that. When people were putting MACDs with the Renko bars. Yeah, you don't need it. It does the calculations for you. There's your divergence line. Tells you everything that you need to know. There's your pivot stop out. There's your reversal. There's your momentum. This is where you make your money, David. So just a little bit of patience. More isn't always better. But here I think is one of your challenges. First target hit. Why give it back? Why give back so much? And then I think right here, that was a trend trade, new stop. That was pretty much a trend trade, new stop. That was another pivot, new stop. Third divergence, take it off. So one of the things, and I posted this earlier, David, and I think that this would help you a lot. I really do, and I absolutely love the fact that you're posting in the room, and I appreciate it because I know you've been with us for a while. Is one of the things that I find, especially people with a million indicators. Not for everybody, Rob. Sometimes it's perfect for people. So everybody's different. But David, would you be able to write down exactly what it takes to get you into the market, and would you be able to write down exactly what it takes to get you out? Do you have a really clear trading plan? Or you're trying to find the money without the recipe, right? You're trying to bake the cake without knowing the ingredients. And I think that the ideas are good, right? Would have had close to 2,000, but I didn't have exit rules. So you made money, and that's great, right? You can make more money just with a little management, right? With a little patience. You clearly know how to read your indicators. Let's make them work for you, right? Let's make your indicators tell you that it's time to go. Let's make your indicators tell you that the advantages are there. So let's see what we have. Well, it's funny that a color would tell you what to do. And everybody's different. Everybody sees things different, right? Everybody finds something else distracting. 5'9" brunettes distract the hell out of me. I'm going to run into a light pole. But it's interesting that the background color would distract you. But all of this doesn't faze you. All of these dots, all of these lines, all of these arrows, all of these everythings don't seem to faze you at all. That's amazing. I don't have that type of one. So third trade beginning. You're going long. You're going long with every indicator down. Once again, do you see it, David? Smalls are down, large are down. And you're going long right after a termination condition with divergence. So you jump in with everything down, and you've got to suffer through all of this crap right at a fib, right? And it pushes all the way down to a pivot stop out. So there's your termination. And now it's finally starting to go up, but you're so hell-bent on these green lines. Did you notice that it was still odds favorable against? And then once they rolled? So I don't tell you guys how to trade. That's not my job. My job is to look at what you're doing and see if I can offer a little help to do it better. So David, there's one thing that I'm going to suggest to you. And this isn't trading advice. Don't confuse this with trading advice. This is, whoops, let me go back. I missed it. This is an observation based on the charts that you're giving me. And what you've done is you're fighting your large chart a lot. Is you're trying to predict what the market's going to do rather than waiting. Just a little bit of patience. You're identifying key areas beautifully, right? And you're convincing yourself that these areas have to hold, rather than saying, let them hold. And it doesn't have to be that hard, right? And I'm a big fan of 21 bigger moves, stuff like that. But the small chart still allows you to manage. But when you're trading against triggers, especially strong triggers, they push the market. And then the same way you shouldn't enter a trade into a termination condition, David, because of rule number 2, these termination conditions, dude, they give you such a clear indication of where it's time to take profits, right? These lines on the large chart, like if I'm in a short and I trade into this divergence low, what a great place to take profits. If I'm in a short, what a great place. And the challenge is that we think we have to have all of it instead of just some of it incrementally, right? 4 base hits is a home run all day, every day. So a little bit of patience. If these are down, and David, the whole background painting thing is when the small triggers get below the large, it paints the background red. And it does that, it says don't go long. That's all it's saying. It's saying, man, don't go long, don't fight it. The immediate momentum is down against you. And when they're above, it's green, and it's easy street. So I think that you're giving yourself so much to think about. I'm going to give you one more picture. And this is for everybody. This is such a good picture. And you'll dig this because this is the might versus have, David. And I made this for another trader in the room. This price right here, with everything saying up, is where that person hoped that the market would stop. And this is using a range chart. And when everything rolled and said, guess what? We are in fact going to go down from this area. It's the exact same price. And we're so good at this, using trigger lines and areas, that you don't have to sit through getting stopped out 5 times or having a $300 or $400, $500, $600, $700 drawdown. You simply wait for them to agree, and then let's go that direction. Does that make sense? I'm not smart enough to make things complicated, so simplicity for me tends to yield the biggest results. Absolutely. And the range chart, David, is a confirmation chart. And that's the most important thing, is when the other two charts say let's go, the range chart will confirm that that's your choice, right? So when the termination condition is intact, every trade, like the HVA trade, says let the triggers roll. So let me show you what it looked like on a small chart right at that termination condition. Whoops. I'm going to make it a little smaller. There's your first loss of momentum. And then when it comes back, there's your second loss of momentum. And if this is really going to hold, David, these triggers are going to roll. And if you tried to get in, the termination said no. But one of the things about great bottoms, if it's really going to go up, everything's going to roll. It will. It has to. It's impossible for the market to go up without your triggers rolling. And once everything agrees, easy. I don't have any rules met for long here, David. That's the thing. Not every penny is my penny. I don't have rules met. The only potential entry that would fit my rules has me trading directly into a termination condition. A momentum style entry. Actually, that's not true, because once we start going up from the good bottom, right there, I have a momentum style entry with the small triggers through the area. And that, in my world, would have been good for at least $200. And then I just would have exited. So isn't it crazy that I'm not first? That my advantages don't come until I get above problems with momentum. And then it's pretty effortless. 90% of every day is waiting. 90% of every day is being patient. So you can hope it goes down, or once you have that odds favorable, look at that little snapback right to the mid-band, right in the triggers, no divergence, strong triggers. David, it's effortless. And when you get to the blue line, get the hell out. That's $300 worth of profit on one contract right there. Does that make sense? Wait for it to all agree. I swear it'll take the stress out. It'll take so much of the stress out. Thanks for posting, man. I know I sound like a broken record in this room where I keep saying, let it all agree. Have things on your side, right? Odds favorable momentum. Everything says down. And Zorro takes a pullback to resistance inside of favorable large triggers. Gets paid. Re-enters on the other side. Gets paid. Everything is down. Everything is down. Everything is down. You're welcome, David. Thank you for being in here, man. And dude, I'm telling you right now, come in every day. Come in every day, and we'll work together. Everything began with odds favorable momentum and a clear path, guys. Everything began from a strong top. Everything says down, and Zorro says there is so much money with this look. I'm going to take all of it. Beautiful trading, Zorro. And Zorro's really good with a knife too, just so you guys know. All right, Jen, let's see what you did. But David, one of the things too, and not just David, but everybody, one of the things that you'll notice in this room, guys, that's very consistent is that the people that tend to win the most are going with the overall trends. The people that tend to win the most are embracing advantages like momentum and a clear path. Those are the two that make it easy, and then there's a million ways to get paid. Let it clear, hop in, get out of trouble. Add on, look at you, you bad mamma jamma. Price clears, triggers through, then I'll get in. And as long as everything says down, I'm going down. It's Friday, brain tired is okay. Nice trade, Jen. Direction, momentum, clear path, guys. Direction, momentum, clear path. Direction. How do I add on? Very carefully. Give me 1 second, Dan. I'll show you. Why do you have two sets of hash triggers? Because, so Rob, go to your large chart. Are you with me in here? Did I lose Red Rob? Guys, anytime your chart doesn't look right, right click on it and go to templates and load. And for your large chart, Rob, click on 13.2 Renko bar. And it'll just load the template back on. So guys, what do we have? We have a no triggers through termination. It's reversing the market. I have the potential to break. My first trade is a shot at a momentum style trade right here. And if that momentum style trade fails, the second attempt becomes a trend trade. Is everybody with me on this? For you guys doing that chili dog, the back of the bar hasn't cleared yet. But after a termination with odds favorable momentum on both charts, small triggers break the area. I'm buying a snapback. And it means that I didn't get paid all the way through here. Is it going to get me? I don't know. It may or may not. And that bad top helps, right? They're probably going to 89. We'll see. You got it back, Rob? Awesome.
Order filled.
All right, so we're in. I'll give this trade 2 bars. Minimal risk. I've got 5 ticks of risk on it. And it either goes up from here, it stops me out, at which case
Order submitted.
I'll just set up for the high probability trend trade. Ah, and it stopped me out. It's going. That son of a gun. But that's it. All I have is rules, right?
Order canceled.
So maybe I
Order submitted.
catch it on the way up. I don't know. There's a million ways to do it. But when a momentum trade fails, typically the trend trade is the next one. Not every penny in the market is going to be my penny. Not every dollar in the market is going to be my dollar. And you guys notice how far away the synthetics are? It may correct down to here. But this good bottom makes me feel pretty good about that. So
Order canceled.
got me by a tick. All right, guys, that's the second hour. I'm going to leave you guys with the market. We'll see what it does. If you take a trade, post it in the room. If you have a question, please ask it. I'm going to go refill my water real quick, scratch my dog behind the ears. When I come back, when we get into this last hour, guys, it's going to be up to you to tell me what you want to talk about. It's going to be up to you to tell me what subject we're gonna look at. So I'll see you in just a few minutes. All right, guys. Last hour. Man, isn't that a bummer? That one followed the rules too, but I wasn't here for it. So there was an opportunity right there. Triggers, areas, beautiful. Sometimes you just gotta wait. Sometimes you miss it, sometimes you get it. Sometimes they get you by a tick, only to mess with you. In the real world, I would have been in on the push-up, but that's just me. I've got a different trading plan than most of you guys because I've been doing this a little bit longer. Why didn't the date update? Day bright line is yesterday the 25th. I don't know. Here you're on the 21st. So, Rob, this is 5 days back. This is 1 day back. Go up here to these arrows and click it. What does that date have to do with your trading, though? Click this arrow right here. Ah, very cool, Jeffrey. Have fun with that. Rob, make sure that you're in the most current. Odds favorable, guys. We're super close to clear. If I get a reversal bar, which I did, I've got a window of opportunity from the highest point of support to the lowest point of support inside of triggers. Do you guys see how this fits the rules? Momentum, path, entry. In that order every time. Momentum, path, entry. Momentum, path, entry. And now I'm just hoping that it gets me. What do you guys want to talk about? Oh, D, you were asking add-ons. It's not quite clear. It's not quite clear. But with a strong bottom, after a weak top, this level of momentum, and this little bit of risk, if it fills me, oh my gosh, my stop has to go down here where the market shouldn't. I'm going to laugh if it goes up, if it clicks me and runs, but I've got room to my target. I've got all the momentum. It's as close to a clear path as I can get. I'm having difficulty finding anything wrong with this. Doesn't mean that it's guaranteed to win. Doesn't mean that it's guaranteed to lose. The reality is I have zero control. All I can do is follow my rules. Some of you are going to say, well, it's not a clear path yet, Mark, and there's divergence. You have a fib where my order's at? My order should be 2 ticks above it, honestly. Well, that's just bonus, isn't it, Morgan? We'll see. You know there's a fight. That's why the market slowed down. Guys, when you see these fluctuations, when you see these pauses, it means that the buyers and sellers are like head to head and just going at it. What do you guys want to talk about? I can just ramble for an hour, guys. I'm very capable of it. I'd rather give you some lessons that you need. Look at that. Those mother scratchers.
Order canceled.
Let's do this. This is always a fun one. What you got, Steve? Experience and time, guys. Eventually you're going to get to where you want to be. Let it take time. I'm not going to go through the whole thing here, but you can't rush experience. You just can't. It takes time. For the NASDAQ or for the gap theory? Because there's the gap theory. No worries. So let's do both of them, huh? Are you talking about for entries or for terminations? The first one is the gap theory. Okay, thank you. We'll do both. So the gap theory says, and this is when the midband will behave as a termination condition. I am recording, yes sir. If price accelerates, whoops, get off of there. If price accelerates away from the large triggers and hits something, whether it's a fib, a midband, but if price, ooh, wow, why is that black? I lost my font color there for some reason. Price accelerates away from the large triggers and hits an area. I'll fix that font in a second. If the large triggers remain a full bar away, which means that they are below the reversal bar marker here. Price is likely, let's go all caps, likely to close that gap. So this is what the gap theory is. And what it says, and let me change that font because that's just ugly. There we go, that's kind of pretty. Price accelerates away. So Steve, you're familiar with the reversal bar marker, right? The point, I don't have the ES up, where this bar becomes a reversal bar. Show the picture, Morgan. If your large triggers are below the reversal bar marker, then it's likely that the gap theory is in place. If your large triggers are above the reversal bar marker, then the gap theory is not in place. So Morgan's going to give us hopefully a live example here. Thanks, Morgan. So on the S&P, price reaches the midband and the triggers are above the reversal bar marker. Guys, this is textbook when the midband is behaving as a termination condition. So Steve, this is the idea of the gap theory, that price is likely to close that gap. If it's coming from a bad top, it's even more likely to close that gap. And all it says is that this short, if you take a shot at 90, 89.50, is less likely to work because this distance, it bounced to the 1-to-1s and then continued down. It happens sometimes. But everything is probabilities, not possibilities. I think Pete said that yesterday. We're trading probabilities, not possibilities. The possibility is that it just runs down forever. The probability, if you go back and look at patterns, is that it will in fact close that gap. And it happens very often. So much so that if you just go back on a large chart, you'll begin to see it where the large triggers don't follow and it just sucks right back to them. And it just sucks right back to them. And it does it over and over and over. So it's a patience piece. It keeps you from trying that first short, right? It keeps you from taking that aggressive short when it may snap back. Does that make sense, Steve? And one of the cool things, guys, is in the spreadsheet, there are so many pictures of the gap theory in here that we've taken in class. Steve, it's not an entry. It's a chart read. That's all it is. It's a chart read. It says that from this point to this point, I'm not going short because it may close. Large chart says down. Large chart has momentum, but because price reached an area and the large triggers are a full bar away, no short trades. That's all it is. And that's it right there, is you're trying to turn a trade out of a pattern that's not a rule. So it just says, Steve, if you go back and see this, I wouldn't go short at 54 anyway because of the termination condition. Well, great. Then you have rules. Not everybody knows that. You and my brother would get along great. Let's turn everything into a trade. All it is a pattern, Steve. You might turn it into a long one day, but when price reaches an area, I don't know why that's in the gap theory. All it says to me is that I shouldn't go short into the area. All it says to me, is that my mid band may be behaving as a termination condition. And there's people that trade the gap theory. There's people that go the other direction. But Steve, remember that we're building a foundation before we start taking aggressive counter trend against momentum trades. And you're absolutely right, because you see it as a long. Steve, you see it as, oh my gosh, that's a bad top. There's great support. It's beautiful. It's not an entry, not even more than it. Yeah, it's just a termination. And then Steve, the cool thing is the more time you spend with the software, you may find an entry. You might get a second higher divergence off of a fib with a trigger roll and close the gap and take the long. But initially, it's nothing more than a termination. It's nothing more than a no more trades in that direction, because it's likely to suck up and hit the triggers. That's all it is. Just one of those patterns. And if you scroll back, you'll see it a lot. Like there's one right there that was perfect. So if you got excited about the termination and the divergence and you're thinking, man, I'm going short, gap theory says, dude, just pause for a second. Pump the brakes, right? And if you're like, oh, look at that termination and I can't wait to go short, gap theory says, dude, not yet. It's just not ready. Pump the brakes. Same thing here. Termination, odds favorable, everything says up. Gap theory says, nope, you got to pause. We're going to retest. You still might be able to go long, but let's not get suckered in here. Same thing here. Odds favorable, everything up. Closes the gap. Cool. Great question. That's a good one. And here we just have a 50-50, right? We've got smalls below the large are wide. This area has the potential to break. The large triggers are not a full bar away. We're already past our mid bands. Now we're just in a medium probability trade scenario. Indeed, that 50-50, it wasn't quite clear, right? And sure enough, it didn't go. Now we're just in a holding pattern, waiting for rules to be met. And guys, it's Friday at 11:21. We'll see what happens. Great question. Did that answer it for you, Steve? There's a guy, and he's not in here today, but he's taking that gap theory, and I know that you've got some experience, Steve. He's taking that gap theory, and I'll show you what he's doing with it. When it's a mid-band, let me see if I can find a mid-band gap theory. Or even for something like this, when that gap theory is in play, what he's doing, here we go, right here. He's going, man, there's the mid-band and there's the gap theory. He's using a range chart. And if he gets a signal from the mid-band area, he's going long to close the gap. And he's doing it with a lot of success. So that's one way that it may go from just a termination to maybe a potential trade to close the gap. The guy named Ron in here does the same thing, where he uses a couple divergences and he'll try to close that gap back to the large triggers. And it's a little more advanced, and you do have to go counter trend, but there are conditions that make it very doable. So guys, we've got odds favorable. We don't have a clear path. Our triggers are split. And the areas are floating in between the two. This is one of those times you're like, man, my rules just aren't met the way I need them. That's NASDAQ, Steve. But yeah, I'm trading. So when I'm trading NASDAQ, the one thing that I'm almost always doing is making sure that I have momentum and a clear path. And that's so key on the NASDAQ. The large chart rules are solid on the NASDAQ. That momentum and a clear path pays dividends. And once you start to sacrifice those, NASDAQ's pretty erratic. It can be erratic at times. So what I'm actually doing as well, and I'll show you, I'll share it in the room, I don't mind at all, is when I'm trading the NASDAQ, so Steve, what you just said is that if the color on the small chart keeps me out of trades, why don't I just change the color? Because I don't want to fight the color on the small chart. Because I lose more than I win. I use a 10-2 for entry. So, where is it at? It's not always going to be red when I want to go long. You're speaking in absolutes. There's a long today. Everything matched. So Steve, could I take a trade with it red? Sure, but why? Why would I? If I know that my advantage happens when I trade with the color, why do I feel like I need to try to be first? And I think that this is one of the things is, Steve, you're seeing a million chart reads that you're associating with opportunities. And I think that's wonderful. I think that's one of the great things about becoming proficient and having those reps. But I always have to go back to the rules because my rules are designed to keep me safe. And one of the things that I've found keeps me out of more trouble is I simply trade with the 10-2 color. I trade with my entry chart color, and I insist on it. Because in order for this to change colors, Steve, something has changed against me. Whether it's multiple divergences, whether it's a catastrophic loss of momentum on the small chart. And the same thing as this, I never trade into 34 terminations. I won't do it. And there's different things that I use, but trading with the color tends to pay huge dividends. So for me, it's a rule. It's an absolute. But you'll go back sometimes, and I don't know if we can find an example of it here, where maybe you'll have a clear path, and the small chart will change color, but the large chart has every rule met. And you may change it, but yeah, on the NASDAQ, so Steve, there's the difference between catching all of it and the best of it, right? There's the difference between being in every move and being in the best moves. And the NASDAQ is different. You know it's different. But just like any other chart, you've got to create rules that have advantages, right? So when I'm trading the NASDAQ, some of my absolutes are absolutely no termination conditions. Some of my absolutes are I will never fight large chart triggers if they're strong. On a 13-2, if you're using the 13-2 for entries, one of my absolutes on the NASDAQ, and I don't know if you've ever been in the room for this one, is I don't use the background color on a 13-2. I have no reference to background color if I use a 13-2 for entries, or when I used a 13-2 for entries. I don't use it anymore. What I pay attention to on the NASDAQ, that's not the one that I wanted. This is what I do on the NASDAQ. I've got two options. My first option is if the small triggers are less than a full bar away, I wait for a close on the correct side. And sometimes, Steve, that'll put me in. That'll put me in with the wrong color, but on the right side of momentum. So that's a 13-2 deal for me. On the 13-2, I'm not so worried about it because I realize that it may push down a little lower or a little higher. The second thing is if the smalls are a full bar away, that same idea, I'll get in at the area. On the 10-2, I'm pretty rigid. I won't fight the color on the 10-2 because it's a faster chart. But if there's no divergence on the 10-2, I'll enter at the area. If there's divergence on the 10-2, I insist on a reversal bar. And those are my two. I don't trade a 13-2 anymore. I trade the 10-2. So yeah, you've got to know what you're up against. So I don't disagree with you on the 13-2 with the colors. Is there may be an appropriate time to fight it a little bit. But the one thing on the 13-2 for me, where was that picture? Is that I won't fight these small triggers. I absolutely refuse. There's no reason to. 13-2 is just fine. But remember that your 13-2, Steve, on any other time frame or any other market is the biggest chart, right? It's that slow-moving chart. And when these bad boys are down, I don't want to fight them. So on the NASDAQ, see how they acted as resistance right here? You see that a lot. You'll see the market bounce right off of these triggers. So if I was thinking short trade, as long as these triggers are up strong, hell no. And if I'm thinking long trade, as long as I'm on the wrong side of them, absolutely not. But once I get to that right side, large chart says go, hell yeah. And that red doesn't freak me out on a 13-2. So yeah, I'm with you 100% actually. That was the longest path possible to complete agreement. It happens sometimes. And sometimes I'll ramble because I want to make sure that I understand exactly what you're talking about and not get caught up in what I believe, right? Because, you know, there's a million ways to do it. And I try to understand what you're going after as well. So, good stuff. Great questions, dude. And I love how one led to the next. I love how one question just brought us full circle to the next question. Guys, that's how you get the most out of this class. Just throw it in there. Say, let me make Mark talk about it for a second. And you'll be amazed at what falls out of my head. It's a scary place in there. Whew. What else do we have, guys? We still have time. Crude oil gave an unorthodox entry, right? Not really at areas, not inside. Maybe a tougher one to catch. If you were chili dogging it, you might have caught a little bit there. Jen, did you get any of that? Did that one meet your rules? Sometimes they do, sometimes they don't. Done for the day? Just listening? Oh. All right, so Paul, strong bottom, odds favorable, not quite a clear path, super, super close to a clear path. You're right, a little momentum opportunity. And then divergence, you waited for the reversal bar, and it just didn't work, man. And you take a little hickey. Friday tired, getting ready for a bevy. I like it. We went out last night. I had my bevy last night. I had the best steak I think I've ever had last night, too. So good. Just didn't work, Paul. That's all it is. It just didn't work. That confirmation can cost money, though, right? But at least you have your stop in place. Confirmation can cost a little money, and I don't disagree with waiting for the confirmation. It just didn't go. Everyone's starting to go to lunch. Everyone's going for deep dish and chili dogs. So good stuff. How are we doing? How are the newer names, right? Francisco, how's it going? Sergio, it's always good to see you in here. Hope you're doing well. Hamid, anything I can do for you? Vittorio. Got all the cool names. It's like Team Italy showed up. Craig. See those Clemson Tiger paws all the time. Jonathan, doing all right. Kenny. Surgeon. Jack of all trades, master of none. How we doing? Soaking it all in. I love it, Mark. Don't be shy, guys. I'm definitely the warm fuzzy. You'll be here next Monday? Very cool. Welcome. So trading book and pencil, are you comfortable with taking pictures? That's going to be the one thing that you want to make sure you're good at here. You will graduate. If you do the work, it's just like anything in life. If you do the work, you'll get out of it exactly what you put into it. You're going to learn the software in one weekend? I love that. That's good stuff. I know. I'm just messing with you a little bit. I do that sometimes. Let me give you these two as well. So these are what trigger lines are. Maybe. Don't force yourself into a time frame. There's an easy way and there's a hard way. There's your triggers and there's your areas. So there's your roadmap for everything that you're looking at so that when we start working on this, you'll be able to say, all right, I know what he's talking about. There is ways to annotate, but everything that we do is we're going to keep it simple. I don't want you worried about the money for the first 20 days. Give me 20 days to find great entries and you'll be floored at what you can accomplish as you move forward. And I like that you're giving yourself the time frame. But don't hold yourself to it. It might happen sooner, right? The easier you make it, the easier you allow it to be, the less you give yourself to think about, really the easier it is to get to where you want to be. The more you're looking at, oh my gosh, I confuse easily. So we're going to talk about 3 rules. We're going to let it happen on 2 charts. And all you have to do is promise that you'll ask for help. And I'll give you every ounce of everything that I have to get you where you want to be. And that's what we do. Every day, I'm boring. I say the same thing every day because repetition creates recognition. So, awesome, awesome. Man, look at that. It danced a little bit, but sure enough, those split triggers, no areas inside. That's crazy, isn't it? Price loves to come back to those large triggers, and it did, but there weren't any areas. Sometimes you just don't have rules met, which means that you're not supposed to trade. Stick to your plan. And then Paul, it's weird how different our charts look. Why did you wait so long to get in? With that look, that was it, brother, right there. Great job getting paid. Great job not giving any back. Nicely done, Paul. Great looking trade. Sometimes we need confirmation, sometimes we don't. This would be one of those don't times for sure. No divergence, strongest triggers, one line. Take that bad boy. Nicely done. Good job, Paul. It's weird to me how different your chart is than mine, though. I'm not sure what template you have, or I'm not sure if I have a different template, but we look so incredibly different. And I don't know why. This says it came back to your large triggers. Am I in trouble? Oh, no. I'm going to be out on Monday, Paul. I'm going to be out on Monday. I got a little minor surgery on Monday, so John's going to be in here. I don't get in trouble at home. Isn't that wild? Yours hit the large triggers? Mine didn't come close. I wonder what's different about our charts or our templates. And maybe it's a NinjaTrader 7 thing going on. But we have a very different look. Kind of kooky. It paid dividends for you. Maybe because of 7? The way it processes. Yeah, I don't know. It worked out great for you. What a beautiful entry. Great profit taking. No giving it back. I'm jealous of your charts right now. Everybody have plans for the weekend? Gonna go do something fun? Take the world by storm? Go hit some golf balls. Put a few bullets through your favorite gun. A bevy, if you will. Packing? Oh, you're headed to Italy, aren't you? Nice. That's on the bucket list. Italy, and I've got a really good friend that tattoos in Zurich. Only 2 days. That's so funny to me. It takes 2 days to drive down. It took me 3 days to get from the West Coast to where I'm at right now. And still inside the United States. How cool to be able to bounce countries that fast. I can get to Mexico in 6 hours. Fun stuff. Yeah, in Australia's huge, right? 2 days in the same state. People always think it's funny. If you drive from Louisiana to New Mexico, it's like a 13-hour stretch. Texarkana to Padre, probably 12 hours, I think. I don't know. It's a pretty good haul, though. Texarkana is like in the upper corner. I like the Googles. 10 hours and 33 minutes. That's a long haul. America's big. So if you go from Texarkana to El Paso, all the way over here, 12 hours to get across the state. That's a big haul too. When we started traveling, we went from Austin all the way to San Diego, and then from San Diego all the way up to Oregon. I bought a brand new car a week before. Jen, have a great trip. Be safe. And by the time I moved back to Texas, I had 25,000 miles on it in a year. Fun stuff. Guys, it looks like we're done. It would appear that we are done for the day. So you guys have an amazing weekend. John Novak will be here Monday. So if you have questions about all the exciting stuff that's coming up, Monday's a great time to be in here. He'll still talk about rules. He'll still give you feedback on your charts. St. Louis to Padre in college. That's a good haul. That's a long time. So have questions ready for him, guys. My brother is the best chart reader that I've ever met. He'll help you with your reads. He'll give you feedback. He'll high-five you. He'll beat you up. And you can talk about the funding company if you have questions about it. And it'll be coming from the source. So I'm going to go enjoy a weekend, guys. I'm going to encourage you guys to do the same. Do a little study. Morgan's like, not yet, Mark. Not yet. Thank you, Paul. It was amazing. We had such a great time last night. Jen, I'm having surgery. It's not going to be enjoyable. It's okay. Just I've got the good cancer on my scalp, so I'm just getting rid of a little basal cell. That's a big haul. Have you done this one, Morgan, when you moved to Cali? What a miserable drive. Did you at least go through Vegas? 41 hours. No, you're fine. We did Kennewick, Washington to Dallas. That was probably the longest road trip I've taken in a while. Yeah, basal's the easy one. They're doing Mohs surgery, Pete. Absolutely. If they ever tell you, hey, you've got cancer, that's the one they want you to. That's the one you want them to tell you. So we did this one, Morgan. That was fun. We were in Southeast Washington, drove all the way back to Dallas. It was rad, though. Chicago to Denver is a good one. We did 3 days. So we stopped in Salt Lake. We stopped in outside of Denver in Frisco, Colorado. And then we stopped in West Texas. And then we made it to Dallas. So I guess it was 4 days. It wasn't too bad. It was fun. A lot of sightseeing. A lot of sightseeing. Coolest thing ever, guys. If you ever get the chance to just spend a month driving and seeing stuff, go do it. GentleCure.com. I'll go check it out, Pete, for sure. I encourage, go see the world. And that's what we did when we went up there, too. We went through Big Bend. We went through the White Sands. We went through all the stuff through Southern, spent a week in San Diego, spent a couple days in Sacramento, drove up just south of Portland, messed with the hippies and the stinky people, and then we went over to Kennewick 6 months later. A lot of fun. Took the anniversary, went up to Banff, had a blast, Glacier National. Go travel, guys. There's so much stuff to see in America. It's mostly water, 70%, right? One of my really good friends, Gary, spent 4 years in the Navy. I love his stories. He's been everywhere. Everywhere. A lot of fun. I get to do some Navy tattoos on him tomorrow. I'm excited. All right, guys, let's call it. Have an awesome afternoon. Pete, I'll go check out that site right now. I'll see you guys Tuesday morning. Take it easy on my brother. He's fragile. You guys take care. Have a good one.